Good morning, everybody. Hope everybody's doing well. Good morning. Good morning. We'll get going in just a minute. Good morning. Morning, brother. How are you? Yeah, transition is nasty looking. If you guys do another session, I'll jump on after this. We've been swamped, been busy. Good morning. Yeah, Option Scout. Thanks for joining us. Appreciate it, man. Good morning. Okay, let's go ahead and jump right into it. I know a few more people will be filing in, so that's fine. So, all right, this is Michael coming to you from Game Edge on Thursday, February 19th with our pre-market prep session. As always, we'll cover our three pillars: sentiment, structure, and trend. Talk about market structure today and kind of what we're looking at for the trading plan for today, heading into the open. And obviously tomorrow is monthly OPEX. So we'll check that out also. All right, so market trend model based on the tick index. We continue to just chop around, even though we did have a bounce yesterday. But really, we ran right into our key level overhead and then just started to see selling coming in kind of midday of the afternoon, reviewing all of our tools. You can check those out. That was posted last night. And like and subscribe on X and YouTube. You'll see our content throughout the day. If you're new joining us today, we appreciate it. But again, like and subscribe there. But yeah, the quick takeaway is the bolded white line is our cumulative tick. That's our intraday instantaneous CT. And that lets you know buying versus selling in the overall market and what is happening. If you're a 0DT trader, that's what you need to be following. If you're a swing trader, 1 to 3 day look, these momentum moving averages are what we refer to the railroad tracks. Those are your directionals. And then our colored ribbon is our longer look back period. This is overall positioning in the market for a longer term trend. We are above those and our mechanical portfolios are turned on. But if you see, obviously, this market trend model, the bolded CT is just continuing to chop around. So really a directionality in the market is not being indicated. And we're fairly range bound. So you should play accordingly and trade accordingly with your trading plan until we get a break in either direction, which would be to the downside or to the upside. So again, we finished in a weakening state below those momentum moving averages, but we're above the colored ribbon. So our mechanical portfolios are turned on. So we'll be entering those positions. But again, we're just within a choppy period heading into the monthly OPEX. So less is more, as we continue to say, really for the rest of the week. Here's our trading view MTM market trend model. Again, you saw that rise early in the day here to the upside, and then we really just started to see the flattening of the market trend model. This is indicating that market participants are not buying or accumulating as we hit a key level overhead. And then we really started seeing the selling pick up into the afternoon. So if you're along the market in the morning, you caught that move up. This was your indication to start taking profit. And then obviously when we started weakening and starting seeing the selling come back in, you should have been out of your long positions and then possibly moving towards a short position. All right, let's move on. The SPX, again, largest, most notional value options complex. I'm going to go ahead and disregard the monthly OPEX because obviously it's tomorrow. So we'll be looking now to the February expiry. Interesting enough, we are call dominated, or sorry, the March expiry. Sorry about that. Interesting enough, we're for the March expiry now, we are call dominated. Again, extremely wide transition area. You see 7,000 overhead. That's the key level, obviously, if we're going to get up to that. But within this overall transition area, that's all the way down to 67.75, which we've tested before. This could just be extremely choppy mess. Even through March after this February expiry. After this February expiry, where that capital gets deployed heading into March will be key to shape the 40,000 foot view and what we call the tankers or the cruise ships and how they're going to steer us into the March expiry. So after this OPEX, obviously we'll have a better handle of where the March looks. But as of now, it's call dominated, so supportive on pullbacks. But that 7,000 level overhead would be the key headwind or a hurdle to get above for a significant market price appreciation. All right, let's move into the upper quartile. 77% you see today and tomorrow are contained within that upper quartile. So these are larger expiries, as you would expect heading into the monthly OPEX. So call dominated above and below spot price. You see transition area here. Spot price is right within inside the transition area. So again, extremely choppy to the upside, 6,900 to the downside, 6850-ish, 55, kind of where we're testing this morning. And then below that, we'd anticipate a move down towards 6825, that quarter level, and 6,800. So we'll look at the 0DT here in just a few minutes, and you'll notice the low net OI exposure within the transition and how choppy it could be for today. All right, moving on the SPXP GEX ratio. Again, this is like a put call ratio, but we add a gamma or time component, which is gamma. So this is weighted for short dated call versus put gamma. I discussed the 0.5 level previous day, opportunity for a bounce. This was right around here. And then we got that resultant bounce and then a bounce yesterday as we actually rose to the 1.5 level. So that's indicating that out of the money calls were coming into the overall complex. But unfortunately, heading into the close yesterday, we actually dropped below that one level. So it's theoretical balance point between calls and puts. So we would give an edge to the bears slightly with a negative slope on the GEX ratio heading into the open today. So we'll continue to watch this day over day. To see significant price appreciation in the SPX, you need to see the GEX ratio rising dramatically and rapidly with a positive slope. Again, that's indicating out of the money call speculation, but we're really just not seeing that. We'll check the delta balance and show you that here in just a minute. All right, moving on, the delta balance chart for the SPXP. Again, this is separating the option structure from above spot price. That's the right-hand plane. That's our green dotted line. Below spot price is your left-hand plane. That's the red dotted line. And then the aggregate is the delta balance. So as you head into the 19th today, which is this expiry, we'll actually see negative slopes even after that positive bounce across the board. We see negative slopes in the delta balance, again, indicating that we're not seeing that out of the money call speculation to have a sustained price move to the upside. And then the left-hand plane, even though above zero, it is, call dominated and will give an edge to the bulls. So for supportive type action, we're actually seeing a negative slope there. So that's out of the money put hedging starting to come back in, even though we're above the zero line. And then that drags the delta balance with the right-hand plane, the aggregate below zero down towards -5. So again, that is indicating weakness as we head into today. Now, heading to the monthly OPEX, we do see the resultant bounce, but delta balance is still below zero. That's the aggregate. And then heading into next week, into Monday, again, significant drop in the left-hand plane as well as the overall delta balance. But we see an improvement in the right-hand plane. That's out of the money call speculation, rising slightly above zero, up towards 0.5. But again, if we're going to have a sustained move to the upside in the SPX, this delta balance needs to be pegged at +1. And you need to see the right-hand plane and left-hand plane well above zero with positive slopes or at least moving sideways. And as of right now, we're not seeing that. So again, could be anticipating some more weakness heading into next week after the monthly OPEX and then resultant bounce into the end of the week next week towards the 25th and into Friday. So we'll continue to watch that positioning day over day. All right, moving on the SPXP net stack command, high sensitivity levels for today. As I discussed, left-hand plane, we're actually in the money calls. We need to stay above 68.50, see where that transitions to push, which is 68.47. So if we do see weakness pre-market and we're below 68.47, this could become put dominated. That would be significant overhead and most likely difficult to move above. And then we'd look for some more weakness down towards 68.25 and then result in 6,800 net charm level out of the money puts. Those should be supportive and stabilizing, again, unless we move below that. And then above 69.20, these out of the money puts would become in the money calls on the charm side. And then over here, we have out of the money calls, 6,900. Again, going to be difficult to get above. That's where we tested yesterday and then really stalled and got rejected. Again, significant right-hand plane, much larger than the left-hand plane on the charm side. So going to be difficult to move above 6,900 unless we see intraday out of the money call versus put speculation. Call speculation would need to be significant to the upside. Gamma, fuel to the fire, sensitivity levels, 68.30, 68.70, and you see those transition areas. And then net Vanna, we're actually set up for a Vanna rally on the right-hand plane, but we would have to see the VIX drop as well as out of the money calls come in and get it above the 6,900 level. But you see it's almost 2-to-1 across the board for the right-hand plane. So we are set for a possible Vanna rally if we see VIX drop, out of the money calls come in, and we traverse the 6,900 level. All right, let's look at the 0DT for today. Again, extremely wide transition areas, as I talked about, drunken sailor range here, but you see the very low net OI. We're in the hundreds here, 200s, even the 500s. So this allows price to be extremely pushed around by intraday call versus put speculation. So our tools, our intraday tools, our volume command, our spec C charts will be vital today to watch for directionality and market participants and positioning. Key takeaway is net delta. We have positive net delta down towards 68.50. You see positive charm here at 68.50. So that really is going to be a key level to stay above heading into the open for supportive and stabilizing type action. And then below transition, I'd look for us to move down towards the quarter level of 6,800. You see that positive net delta comes back in with a little blip of positive charm. Overhead, moving above transition, you see the charm continue to grow via these out of the money calls up towards 69.35. That's where the peak X level is. And then we see a really headwind heading into 69.45 and 69.50. Again, getting above 6,900 is going to be that key area. Transition, positive charm. Again, in the money puts overhead dominated there. You can see those are pretty much stacked from 68.90 up towards 6,900. So I think that's going to be our stalling area for today. And if we see the same resultant up move towards 6,900, and then we start to see the market trend model start to flatten out and then start to look for selling into that 6,900, then obviously we'd move back into the transition area and it'd be extremely choppy. So our key element for today for the trading plan is to be low position size. And if you're within this transition zone, you need to be butt in the seat. If you're trading directionality wise, it's probably going to be extremely choppy. And with the price moves back and forth very rapidly within this 68.45 really to 6,900 zone. So that's the key takeaway for that. All right, this is being brought to you by GameEdge.us. Sorry about that. Let's go to our website. Newsletter, you can click here, put in your email, you'll be delivered beyond the bell for the weekend. All of our tools, thesis, and how we go about looking at the SPX option structure. Free courses, Game Edge Fast Pass. Make sure you check that out. Goes over our options, goes over the options market, our methodology, and then click on the pricing tab. You'll be taken to our Discord. 14-day free trial, all the tools turned on, and you can come join the trading community. So, all right, let's look at a few individual tickers. I see them posted already. So let's take a look at these. End of the week expiry. Sure, we'll take a look at those JS. So heading into the monthly OPEX, obviously end of the week. MU call dominated, had a significant move to the upside. Absolutely, Butch. Thanks for joining us. And continues to be supportive, well above transition. So that looks great. Let's go ahead and look after this expiry. I'm going to flip to the upper quartile. Call dominated, transition, above transition, supportive in the money calls below us. So MU looks fairly decent. Speculation to the upside, though, you actually see PGEX below spot price. So you need to see that speculation continue to rise heading into next week. PGEX up towards 440. So that's why I look for spot price to move. You actually see us under transition, though, heading into next week. So price appreciation may be a little difficult on MU, but supportive on any pullbacks. SDNDK. Monthly OPEX, put dominated on SNDK. You're actually below transition though. So in the money puts overhead, going to be difficult for SNDK to move up. Upper quartile, put dominated. So SNDK looks much weaker than MU on that aspect. We actually have some in the money calls below us, but we're put dominated on SNDK. You need to see the overall structure change for significant price appreciation on that. All right, let's look at Netflix, upper quartile. Call dominated. Those, I would assume all those calls are below us there as there's significant in the money puts overhead. That's going to be difficult for price appreciation. Call dominated. Yeah. So those in the money calls here are what's driving this gamma condition. And we have significant in the money puts overhead. So getting above 80 is going to be difficult. On Netflix, really don't see that change much. We actually see PGX move up towards 100, significant out of the money speculation there, but you have in the money puts overhead that are really driving the overall structure. So price appreciation is going to be fairly difficult unless we get through this, or we see these in the money puts expire, or you see some sort of monetization there, or you see significant out of the money calls overcome these in the money puts. And then you would be able to have price appreciation, but that's going to be a difficult move to the upside. All right. Let me go over Netflix really quickly. Netflix, call dominated, but below spot price. In the money puts overhead, though, so appreciation is going to be difficult. Again, same thing. In the money calls below supportive. In the money puts overhead, so price appreciation is going to be difficult. Oh, I went over Netflix. Sorry about that. I just went over Netflix. GLD, call upper quartile, call dominated, above below spot price. GLD still looks great. For price appreciation up towards 475. Everything looks good there. And Amazon, let me check that one, and then I got to jump off real quick. Amazon call dominated, looks good within transition there, supportive on any pullback. Friday expiry. Call dominated, in the money puts overhead though, so 207.50 is going to be price appreciation cap on that, and then 207.50 there. So really difficult for price to move up on Amazon, as long as with the other Mag 7 stocks. So Root, monthly expiries only, call dominated, but very low OI. So take this with a grain of salt on that. So, all right, thanks everybody for joining us. Like and subscribe. Thanks, Perry. Like and subscribe on X and YouTube. Be notified when we go live with our content. Again, key takeaway for today is choppy price action between 68.45 and 6,900. All right, thanks everybody. Manage risk as always, and we'll see you later.